Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 19th of July 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. We'll have a quick look at some of the instruments that we looked at this morning as well, so just to see how everything kind of got along. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our videos, and also our JFD research page where you can go and check out our daily analysis that we do. So, yep, I believe you can find a lot of useful stuff here, but for now, let's jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, I've looked at the S&P recently, and of course, I was kept talking about the psychological 3,000 level. So, in a way, looking at the cash index right now, and let me just quickly open that one. We can see that it's currently the price is currently slightly above the psychological 3,000 level. So yesterday we had a nice push here to the upside. It managed to kind of get into the positive territory for the day. This was driven mainly by the comments that we got from the New York Fed president, who said that the cuts are going to be happening probably in July. So or should I say, the Federal Reserve is cementing, as the word was used, cementing the possibility of having a rate cut in July, in the end of this month. So I mean, we saw investors jumping into more riskier assets such as stocks, and like as you can see, we had a nice push here to the upside in the US indices. So S&P 500 managed to close slightly below the psychological 3,000 level, but looking at the cash index right now, it is just fractionally above that level, above that psychological 3,000. So in a way, this puts us in a more of a neutral territory, to be honest, because in a way it could travel higher today. It could in a way revisit the 3017 zone, 1718, something like that, basically the all-time high here for S&P 500. But if that fails to withhold, of course, this would confirm a forthcoming higher high, and we could see this one traveling further up. But the only thing is that we're going to be very careful here. If we see a daily close today above above the 3018 level, then yep, this confirms a new all-time high, and next week maybe we could see this one drifting a little bit further to the upside. But if it let's say even if it gets close to this all-time high, the 3018 zone, even if it gets close to that level but doesn't, let's say, close above it, then still there is a possibility to see the index kind of pushing further up and going into next week. The only thing is for us to, let's say, start examining the downside. Well, ideally we need to see a drop below this tentative upside support line taken from the low of the 14th of June, and then yeah, we will consider these slightly lower areas. Now, I do have the highlighted area near the 2954 zone, approximately around there. Now, this is kind of for that better confirmation of the downside if you want to kind of let's say examine something more near term. So in a way this would confirm a further decline here, and we could then target initially the area, this area right here near the 2910 zone, and then of course we'll take it from there and we'll see what he wants to do after. But again, like I said, for now this is kind of the boring conservative approach here in terms of the downside. Of course you could start looking at lower levels. If we see a drop below this upside support line, then yep, we could see this one drifting to the downside here. But like I said, initially this will be seen as a nice good area of support, but if it gets broken, then yep, we could see further declines. For now, keep your eyes on the upside as well, and keep your eyes on this all-time high figure near the 3018 levels. So jumping into silver now very quickly, and this is what I was talking about this morning. So basically, I was telling you guys to keep a close eye on the and keep a close eye on this level here near the 16.49 zone. We did travel higher, but kind of never reached that, and then it reversed to the downside. Now, of course, here what I'm saying is that still we cannot really draw a Fibonacci here, because we're still waiting for that nice good reversal signal here. As you can see, we did travel a little bit lower here. It almost managed to reach the pivot, but kind of failed to do that and reversed back to the upside. So that's why for now, even though we're keeping a close eye on, and because to be honest, it would be interesting to capture this little retracement here, maybe up until the 23.6%, but for now it's still, we're waiting for that kind of confirmation of where exactly will it find good resistance in order to kind of let's say try to capture this little slide here to the downside, the little correction to the downside. So that's why for now, let's even actually get rid of this one, because for now it's just, like I said, it's just one-way traffic here. It is pushing higher. If you want to draw an upside support line here, I mean, you could, but to be honest, I mean, it's a bit of on a curve here. So that's why we'll probably just continue observing this one. The 16.49 level. Just to show you what that level was in the past, and probably I'll have to jump here. No, it's okay. I thought I'll have to jump into a daily chart, but this was near the highs of June, the end of June, or near the highs of June 2018. So, or should I say actually near the highs of the end of June, so around the 22nd, something like that. So basically, this could be seen as a nice potential area of resistance. We'll keep a close eye on it today, and we'll keep on monitoring it, keep on monitoring the close. If it struggles to push above this, then yep, this is where we could potentially draw that Fibonacci and maybe aim for that little correction here to the downside. But for now, it's all kind of one-way traffic to the upside. DXY is pushing to the upside nicely here today. The only thing is that it kind of is balancing above this this key area of support near the 96.68, 65, around 68.70, something like that. So this potential area of support, or should I say, actually wouldn't say the word potential, but this area of support kind of continues to play out nicely. As you can see, of course, previously it was playing the role of resistance, but then in the beginning of July, and then throughout the whole of July, continues to hold this this index from dropping lower. You can see that in the DXY pushed higher again, and now what we're going to do here is we're going to try to find some levels here where the DXY could potentially kind of test again, and one of the first ones what we're going to be looking at here is near the 97.26-25 zone, which is kind of marked by the high of the 18th of July. If this fails to withhold, if it fails to withhold the DXY lower, then yep, we could see this one pushing to the upside, further upside. We could maybe target this little high that we saw here on the 17th of July. Let me just quickly put this one on the chart. So this is around the 97.44-45, and of course the highest point of July would be near the 97.60 zone. So again, we will be very careful here, because yes, these levels, these higher levels do look attractive. The only thing is that before we kind of could aim for that one, we do have a little tentative downside line. So in a way, even if we see a push above the 97.26, keep your eyes on this little tentative downside line. Now if this gets broken, now this is where we will aim for these previous highs, or in other words, even the highest point of July here near the 97.60. So for now, of course, it is trying to push higher. It is we are currently kind of still targeting slightly higher levels here, but we're going to be very careful near the 97.26 and this downside line. So we'll keep an, if it holds, we could see another leg of selling here. But to be honest, for those who are more on the cautious side, what you could do here is just wait for a drop below this level here, below the 96.68, something like that, and then consider further declines. For now, we're kind of stuck here in a little limbo. So from the very short-term perspective, it could push a little bit higher here, but it could get held near this downside line. If that downside line gets broken, we will aim initially for the highest point of July 1st, and then we'll take it from there, because if it holds near this 97.60 level, we could end up seeing something of a range here. So this is something else that you can consider as well. I mean, of course, I don't want to overcomplicate things here. For now, from the very short-term perspective, keep your eyes on the upside, keep your eyes on this downside resistance line. Let's see if it holds. USDCAD. USDCAD had a nice push today. We did get the retail sales figures from Canada here, and of course those, or not of course, but those just came out as a disappointment, and you can see this is the effect that we're having here on USDCAD. So after kind of holding near this key area of support near the 1.3020 and kind of testing that area again today, you can see that it acted as a very good area of support once again, and we saw this one spiking to the upside here, testing the 1.3095 level. I talked about this one a few times in my previous videos. We did have a break above it. We did have a test of the 1.3107 zone, also have mentioned that one, but as you can see, the bears quickly pushed the pair back down, back below the 1.3095. So in a way, what we would like to see here is ideally maybe a daily candle closing above this 1.3095, and then yep, we will aim for slightly higher levels. We're not going to drag this one too high because we do have a downside resistance line here running from the high of the 31st of May. So that's why we will only, if we see a nice good daily close above the 1.3095, then yep, we will aim for this downside line initially, and after that we'll take it from there. Maybe we'll see if it actually holds it. If it holds, then we could see another leg of selling, but let's not overcomplicate our lives here. First, let's see what it wants to do with the 1.3095. In terms of the downside, again, very conservative approach here, waiting for that break below the 1.3020, ideally a close of a daily candle below the 1.3020 in order to kind of consider further declines, because this way the pair would confirm a forthcoming lower low, and it could open the path towards further declines. Euro dollar. Now this morning I talked about this one, and this is what I was talking about. Basically, I kept on saying that this little territory for us here, roughly between the 1.1244 and, to be honest, in the 1.1280 zone, approximately around there, this is our little neutral territory. Now that the pair broke below this 1.1244, of course, it increases the chances for this one to travel further down. The only thing is that still we have this upside support line that kind of in a way continues to hold the rate from falling lower, and we're going to keep a close eye on this one. If it gets another test here, this will be very interesting to see, because if it gets a break this time and we see the pair sliding further below, let's say the 1.12 level, and kind of hitting the 1.1190, this is where we're going to be watching, because we need to see a nice good drop below the 1.1190 before we could aim for lower areas. For now, it's still stuck above the upside support line here. It's, again, we're not touching this one right now. We're just going to continue observing it, because for us, let's say, to aim for higher levels, ideally we need to see a push above the 1.1280, 75, 80, something like that. But in terms of the downside, we need to see a drop below the 1.1190, because for now this is a very tricky. I mean, it could move either way here. I mean, it's at the moment we're just watching this one. EURGBP. Now this is something interesting here, and finally, let's say we're having a nice good move here to the downside. The only thing is that be very careful today, because even though we did have a nice break here of this short-term upside support line, I mean, for now, yes, we did have a drop towards this level that I talked about this morning, this 0.8955. But in order to kind of, let's say, consider further declines, we need to see a nice good clear break below this 0.8955 level, because this way this could open the path towards the 200 EMA initially, and then maybe even lower. But for now, you can see that it's kind of the bulls and the bulls and the bears are really fighting this one out right now and trying to see who's going to actually kind of take the upper hand today. If the bulls manage to push this one back above this upside support line, this will be very interesting to see, because maybe next week we could have another push higher. The only thing is that probably what we're going to do here is, just to be on the safe side, we're going to wait for this push above the psychological 0.90 level, and maybe just for that better confirmation, I'm just going to draw another level here. This little area right here near the 0.901315 zone. So just for that, maybe even better confirmation of the upside. So we will start considering the upside if we see a push back above the 0.90 level. But if it makes another run above the 0.901315, then yep, this is where it could become exciting again for the bulls. For now, the bears are kind of enjoying the moment, let's put it that way. The rate is currently balancing just slightly above the S1, which is around the 0.8965 level, approximately around there. If this pushes further down, we will keep an eye on the 0.8955, but if this fails to withhold, then well, this is where it could be very exciting for EURGBP bears, and we could see this one traveling further down. Also, what you could keep an eye on is, of course, the weekly candle, because currently the weekly candle is turning red, or in my case here, black. So if it stays in the negative territory for the week, this is where it could become interesting, because like I said, we could see maybe further declines. But for now, of course, this is just an idea. We need to keep an eye on this weekly candle, and this is what I strongly recommend doing today. If it closes in the red, then well, it increases the chances. I'm not saying that this will kind of lead towards the downside, but it increases the chances for your GBP to maybe aim for a little bit of more correction here to the downside, because as you can see, for 10 weeks in a row we had this nice push higher. This is the 11th week. Initially we had a nice push here to the upside. It looked like that EURGBP could continue moving higher, but if this week closes in the red, then well, we could have a little bit of a slide here to the downside. Of course, this is what it would be interesting to see, but again, let's see how this is gonna close today. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me on Monday, as always, on my Traders Espresso, and that's 6 o'clock GMT time. For now, I hope you, for those who are still trading, I hope trading goes well for you today. For those who are finished, and for those who will finish later on, have a fantastic weekend, guys. And I'll see you on Monday. Thank you very much, and bye-bye.